Buying your first home is very exciting, and everybody seems to have information on how to buy your first home. People who have bought a home before, people who have never bought a home, everyone seems to have the guidelines on how to get your first property. But what I'm going to do as someone with 30 years finance experience, I'm going to talk you through the process, what to look out for, things to do, mistakes and pitfalls, and also talk you through affordability and what banks look for. So this session is going to be very useful if you're thinking about buying a house, or if you know someone who's thinking about buying a house. Make sure you watch all the way until the end, because everything that I'm going to go through is very important. So many people dream about buying their very first home. The correct order in which to buy the home is what I'm going to go through with you right now. I'm going to explain to you how to avoid expensive mistakes, how much deposit do you really need, how to improve your chances of getting approved with the best lender first time out the box, and what happens after you're accepted. My name is Anthony Lindsay, and I've been in finance for over 30 years. So the information that I'm giving you is not just about mortgages. It's also a step-by-step process to how mortgages work and things to consider after you get the mortgage. Always remember that your home is at risk if you don't keep up the repayments on your mortgage. So getting you in the home is one thing, but keeping you in the home is what I want to make sure that I help you do. Buying your first home, the correct order to buy the home, how to avoid expensive mistakes, how much deposit you really need are all things that you should consider. The biggest mistakes that I see first-time buyers make is they do it completely backwards. So what they tend to do is find a house, fall in love with the house, make an offer, and then call a broker because the estate agent has told them that they need an agreement in principle. They may not even know what an agreement in principle is. So I'm going to talk you through the correct order and how to do this. So are you actually ready? Being ready to buy a home is something that not everyone actually thinks about. They think about the concept of buying a home, but they don't think about actually being ready. Do they still have emergency savings left over after they purchase the home? And are they comfortable with the responsibility of owning a home? One of the great things about renting is that when you're renting, if the boiler breaks, if the roof falls in, if anything goes wrong, you can call the landlord. When you own the property, everything is on you. So make sure that you're considering owning a home, not just renting, and the expenses that come with owning your own home. Understand the budget. So the things that the lender is going to consider are your credit, your income, the source of your deposit, dependents, and your spending habits. So these are the things that the lender is going to be assessing when they're considering if they can give you a mortgage or not. So these are the things that as a broker, I'm going to help you go through in advance, because the worst thing that can happen is you find a house you love, you think you have an agreement in principle in place, and then you actually find out that the lender won't lend because the broker didn't do a thorough job, or you went directly to your bank and they didn't look at criteria. Credit matters more than you think. Check your credit report. I find that a lot of people don't check their credit report regularly. Best advice is to check your credit report at least once a year. I would say twice a year, but at least once a year. And a regular occurrence is that I'm doing a mortgage for someone and they start the process, they get their check my file credit report, and there's a default on there or a missed payment that they were unaware of. This is why it's so important that you check your credit report regularly. Check if you're on the electoral roll. This will help the process move a lot quicker, because sometimes what the lender will be able to do is check your address and verify your address through the electoral roll. Pay everything on time. Don't miss any payments. Don't make any late payments. So the best way to do that is to just have everything set up on a direct debit and keep your credit utilization low. What that means is you may have a credit card with a £3,000 limit, and it may be something that you pay really well, you never miss a payment, but you're using or utilizing a high amount of your available credit. Lenders do look at that. They want to see that you're not stressed by the amount that you actually owe. So pay things down if at all possible. How much deposit do you need? This is a question that I get asked a lot. So the loan to valuation. The loan to valuation is the amount that you are actually borrowing from the lender versus the value of the property. So if your house is worth, let's just say, £100,000, and you pay down £25,000, that means the loan to valuation is 75%. So you're going to want to understand what percentage or how much you can pay down on the property that you can estimate the loan to valuation, because a larger deposit can mean better rates, more lenders that you can go to, and lower payments. So by having a higher deposit, it means that you have more options on which lenders you can actually go to. Another thing that you want to consider as you are looking to get your first property is where the deposit is coming from. This is more important than people actually realize. There's lots of ways that you can come up with a deposit. It could be savings, it could be a gift from a family, inheritance, a lifetime ISA. The right to buy discount can be used as the deposit, or you may have money coming in from abroad. But depending on how you're coming up with the deposit, it will impact what lenders will lend to you. So for example, a gift from a family member. You can get a gift from a family member, but you have to make sure it's a gift and not a loan. Equally, some lenders don't want to see that the entire deposit is coming in as a gift. Some lenders won't allow gifts from friends. So these are the things that you'll talk through with the broker. The lifetime ISA is a great product, but a lot of people don't realize that the money in your lifetime ISA is not given to you, it's given as part of the completion. So if you have 20, 30,000 pounds in your lifetime ISA, and that's all the savings you have towards the purchase, you're going to want to speak to a broker to assess how you're going to come up with the money to pay the solicitor, maybe valuation fees and other fees that are associated with purchasing a property. Remember, it's not just about the deposit on the home, there are other fees involved. And this is why you should speak to a mortgage broker first. They can help you understand the process and the affordability. If this is the first time you're buying a home, the process may vaguely make sense to you, but there's probably a few intricacies that you're not aware of. They can also help you compare lenders and avoid unnecessary credit searches. I see this all the time. People say, hey, you know what? I don't want to pay a broker. I'm going to go directly to my bank because my bank's not going to charge me. But then maybe because they have a unique or complex income structure, their particular lender cannot lend to them, but they've already got a credit search. So by going to a broker who's going to check the criteria in advance without doing a credit search, you'll save time, you'll save hassle, and you'll also avoid unnecessary credit searches. The other thing to keep in mind that you're going to save time and reduce stress. As a mortgage broker, I don't just assist you with getting the mortgage. I assist you with understanding some of the documents. I can refer you to a solicitor. If you need a good builder, I can refer you to a builder. So I am here to support and help you throughout the entire purchase process. I get it. You don't come to me to get a mortgage. You come to me to get a house. And there's a lot more involved with getting a house than just getting the mortgage. One of the key things that a good broker will do in advance is check the lender's criteria. What that means is, if you go on Rightmove or Zoopla, or even if you go on the lender's website and just do the affordability assessment, you may find that it says that you qualify for a £500,000 mortgage. But do keep in mind, Rightmove, Zoopla, and even the affordability checkers on the lender's website don't take into account criteria. So that 500,000 may not be available to you because maybe you have a skilled worker visa, or you have a recent default. There may be some things that the criteria would prevent you from qualifying for that product. A good broker will help you avoid all of these problems, all of these delays, and find you a lender who will lend based on your criteria. My name is Anthony Lindsay, and I've written a book. It's called A Mortgage is a Really Big Loan. I wrote this book after 30 years of working in finance and getting questions from people who don't want to feel stupid, but they don't understand certain things about finance. And that's okay because they may be an accountant or a doctor or a mechanic. It doesn't mean that they're going to understand finance. So check out my book. It's available on Amazon. I go through credit, income, deposit, and different criteria that lenders will go through in order to offer someone a loan. Now, you may not understand the mortgage process. The mortgage process is pretty straightforward. And if you have a good broker, they'll walk you through it. But let me just explain what the entire mortgage process is. The first thing, as I said, speak to a broker. Don't pay the broker up front. Don't pay any fees, but just have a conversation that they can understand your individual circumstances and therefore give you the best advice. The first thing that they'll do once they have the right documentation to verify what you're telling them is they'll get you what's called an agreement in principle. It's sometimes referred to as a decision in principle, a mortgage in principle, but basically it's just a document that says based on the information that has been keyed in, the lender can lend to that individual. Now, the key thing is it's just based on the information that has been input. It's not validated at that point, but a good broker will make sure the information that they're putting in is correct. That way, that agreement in principle will convert into a mortgage offer, which is what's important. So once you have the agreement in principle, you know how much you can borrow. That's when you should go and look for properties within your budget. So if your agreement in principle says that you can purchase a property for up to 450,000, please don't tell the estate agent that your price range is 430 to 460 because they're going to show you houses at 480. There's a saying that estate agents use, which is people always buy at the top of their budget. So understand your budget based on your agreement in principle and do not go above that. So you find your property. At this point, the broker will then do what's called a full mortgage application. This is when they key in the specifics about the property because the lender's already said on the agreement in principle, I'll lend to Mr. Smith, but now they have to decide if they'll lend on that property. As part of this process, the lender will do a valuation. It's a valuation and not a survey. The difference is this. The valuation is for the lender. The valuation is when the lender determines how much they think the house is valued. A survey is really more to understand if there are any structural issues. The survey is for the buyer. The valuation is for the lender. So once you've got the full mortgage application completed, they'll do a valuation and they'll do the underwriting. Usually takes about 10 to 15 business days, depending on the lender and your circumstances. Once the lender has reviewed that information, they'll do what's called a full mortgage offer. The full mortgage offer is the lender saying, yes, we did say we'd lend to Mr. Smith, and now we've looked at the property, we've looked at the purchase price, and we agree with everything. We're happy with that property. This is when the solicitors then take over. They communicate amongst each other. If you're working with me, I will have been introduced to a solicitor on the very first call. That way you can do your due diligence. You can make sure you get that paperwork out of the way. Some sellers will have already done what's called a seller's pack. That will cut weeks off the purchase process, which usually takes 4 to 6 months. But if they've done a seller pack, you can turn it around in 2 or 3 months. So you now have the solicitors communicating with each other, doing the searches, etc. Then you get an exchange date. Then you complete. When you complete, that's when you get the keys to the property. You might be wondering, well, how do I prepare? The first thing that I would say to prepare for your mortgage is to make sure that you tidy up your bank statements. If you have any direct debits, standing orders that no longer need to be there or are duplicates, this happens a lot with insurances. You may have a packaged account from your bank that gives you travel insurance, let's say, but then you're also paying another travel insurance. So just tidy up your bank statements, make sure that everything makes sense, avoid gambling, avoid payday loans, anything like that. Those things can disqualify you. Check your credit report. Don't go to Equifax or Experian or TransUnion or your bank. Get your Check My File credit report. The reason why I say that is because not every lender reports to every credit reporting agency. Just today, right before this call, I had an instance where a client of mine had a check my file report that they had sent over to me, but only on the Equifax did it show a default. So on TransUnion and on Experian, it showed nothing. So that means if they had shown me the Experian or the TransUnion, I'd have thought everything was fine. So check your credit report with check my file. Maximize your deposit. So do things like put the savings that you have in a high interest savings account. Almost guaranteed, although I'm not giving tax, legal, or financial advice, almost guaranteed if you're saving money in a high street bank, you're probably not getting the best interest rate. So find a high interest savings account where you're getting a good return on your savings, especially because the purchase process can take 4 to 6 months. So that means if you have a sizable deposit, you could be earning interest every month. And that's what you want to do. So maximize your deposit. If you can, and you're planning on buying in more than 12 months, check out the lifetime ISA. And as I said, speak to a mortgage broker. I get it. Some mortgage brokers don't like to speak to people unless they're ready to buy now. But if you find a mortgage broker like myself, I prefer to speak to someone when they've just started to consider making the purchase. That way I can help them tidy up their credit, get their savings together, that when they do find the home that they want, we can make sure and get them the mortgage at the very best price. Here are some more tips. Be honest and be realistic. It happens all the time. People call me, they tell me they don't have any credit issues, or they've never missed a payment, or they don't have any payment arrangements. But then when we look at the credit report, they actually do. It's not that they're being dishonest, but quite often they either don't understand the terminology or they just don't think it's important. Be open, tell your broker everything. They will assess what you're telling them and find the right lender based on your circumstances. A good broker will think about the future. Again, I had a client just today who we're doing two different processes for. I realized that the second part of the process will be problematic if they don't do something now. So I do more than just get you the mortgage now. I want to make sure that you're in a good position that when you go to remortgage, or if you have other plans of buying other investment properties or whatever, I want to make sure that you're in the strongest position. So make sure you find a broker that's not just trying to get you the mortgage, but is also considering when you remortgage, what's going to happen 3, 5 years from now? Are you planning on buying other properties? What about, family expansion? A good broker will consider only all of those things. Another thing, only supply the documents that the broker has asked for. So if the broker has asked for 3 months worth of bank statements, don't provide 7 months. So they'll ask you for what they need, send them what they need, and supply it exactly as they've asked for it. The reason why that is because if I've asked for 3, that means I know the lender only needs 3. If you send me 7, it will just slow things down. So always send what's asked for exactly as it's asked for. And I would also add another tip. Put some time aside to complete the documents. Our fact find at my firm takes about 15 minutes to complete. The documents that are requested of you are all available online, with the exception of maybe your passport. But most of the things are available online. So just set some time aside to make sure you do it. It may take you 30 minutes if you set the time aside, but don't just say, I'll get around to it, because life does happen. And we want to make sure that we get you through the process as quickly as possible. So prepare yourself. I'll tell you those items, by the way. You're going to need, in most cases, 3 months bank statements, 3 months payslip, proof of identification. We ask for your credit report in advance that we can do the criteria. We'll need your proof of address, and I think I've said your ID. There may be other things that the lender asks for as things progress, but these are the things that we know that we require in order to move to the next stage. My name's Anthony Lindsay, and if you are a first-time buyer, or you know someone who's a first-time buyer and they're looking for impartial advice, no pressure, no stress, someone who will answer their questions and not charge them for the luxury of a conversation, make sure you share my details. Share this video with them. Hopefully you found it useful. And if you have found it useful, make sure that you leave a comment. If there's something that I didn't cover that you think that should be covered in one of my future videos, put that in the comments as well. As you can see, this is a really small channel. I do my best to provide quality information in a way that can be useful to you. And even if you don't work with me, at least you'll understand the process better. But the key thing that I would say, always speak to a broker, get the information, do your research, and don't feel as if there are any silly questions, because as a first-time buyer, you're not expected to understand everything. And if you don't ask the questions, then you won't get the answers. So as I said, make sure you like, make sure you subscribe, and make sure you share this video. I'd really appreciate it.